This video is brought to you by HalloCasa. Our tool transforms independent local real estate agents to global real estate agents. Create your own profile for free and get contacted by international investors. Sign up with the link in the description. Hello and welcome everyone to our 193rd session of HalloCasa. My name is Michael and today I'm talking to Marc Taverner, founder, advisor, investor and a leading voice at the intersection of crypto assets and agentic AI. Marc has 3 decades of experience in emerging tech and now serves as CEO and co-founder of XEROF, a Swiss regulated exchange platform that makes it easy to buy real estate using cryptocurrency. His company bridges the gap between digital assets and traditional finance, providing seamless, compliant and secure crypto-to-fiat settlements, all designed specifically for high-value real estate transactions. In this episode, we'll explore how crypto is transforming global property markets, the impact of evolving regulations, and what investors need to know when using digital assets to purchase real estate. Marc, thank you so much for your time. I'm really impressed, obviously, by your profile. I'm really honored also to have you on the show. Why don't you introduce yourself to our audience in your words?
Thank you for having me, firstly, Michael. It's a real pleasure to be here. Thank you for the very kind introduction as well. Now I've got something to live up to, huh? At least in the eyes of your audience. So I guess I'm what you could regard as a crypto dinosaur. I started my journey in crypto in 2013, having promised my family that I would retire, stay at home and not travel again. I did that for 2 years, from about 2011 till 2013, where on one fateful afternoon, I got a call from someone who just asked me the question without even giving me their name: have you heard of Bitcoin? Of course, I'd heard of Bitcoin, having been a tech entrepreneur for the prior 25 years. And that was the start of my journey. The very next day, I found myself in Schiphol Airport in Amsterdam, meeting the founder, the co-founder of one of the world's biggest Bitcoin mining companies at the time. We didn't even clear passport controls. We sat down for about 4 hours, agreeing how we were going to work together. I got back on the flight to London without even having set foot officially in Amsterdam, having not gone through passport control. And the very next day got on a flight to China. And the rest was a 6.5-year history lesson of how to learn as much as possible about blockchain, of course, Bitcoin, silicon, semiconductor design, electricity, distribution, electricity, purchase agreements, and how to build solutions around blockchain that would engage the wider population and create value. So a lot more than just Bitcoin. I spent 6.5 years learning more than a simple guy like me should ever be allowed to learn about this wonderful technology called blockchain, Web3 and crypto. And then at the request of the European Commission, started up a trade association for the blockchain industry to help provide evidence into a regulatory framework that was being constructed called the Market in Crypto Assets, or the acronym is MiCA. So I spent 2.5 years through lockdown building that trade association and represented 170 companies from the blockchain industry and negotiated very painfully with the European Commission and all 30 member states of the economic activity area around topics of crypto and blockchain, which began with education. So many of these regulators, members of parliament and members of the European Commission had a very low level of understanding about crypto, just really what they would read in the headlines, which at the time were mostly negative. Lambo boy, crashes Lambo into a 120-year-old oak tree and kills, a historical heirloom of the village in the tree, the oak tree type of thing. So, very negative. And that was really what brought us to wanting to build applications like the one that we did with XEROF that would add value, help demystify some of the technology and make this wonderful technology a bit more accessible. So that's the experience relating to crypto, and that's kind of what brought me to the current position at XEROF, which is the business that we're focusing on at this point in time.
Let's jump directly into XEROF. What is the solution? What are you facilitating for services, and who are your potential clients?
Yeah, well, Michael, what we noticed from many years of experience in the crypto space was that these individuals participating in crypto, particularly in the very early stages of crypto, had begun accumulating levels of wealth but that wealth they struggle to realize and convert into wealth in traditional formats. So diversifying into things such as property, real world assets, maybe art, maybe collectible cars, maybe collectible watches. And in real estate, we saw an enormous opportunity for those individuals who are generating wealth to help them manage their portfolio and diversify a little, because many were wanting to find second family homes, many were wanting to invest to get in property, to gain access to passports, to gain access to residency. But we're really struggling because the real estate world and the ecosystem around the real estate world didn't understand crypto and refused to take payments. At the same time as the banks were and still are refusing to touch anything that was associated with crypto. So we saw an opportunity to step in and act as the intermediary that would exchange crypto to fiat currencies, and fiat currencies are currencies such as euro, dollar, pounds, whatever, that is represented as a unit of value or supported as a unit of value by a country. And once we'd run that exchange into fiat, was then send that fiat to the notary or the vendor of the property, as you would if you were buying a property with regular fiat. So we became the intermediary to run the exchange on behalf of the crypto holders and to send that fiat that we'd exchanged to the counterparty, who was either the vendor or the representative of the vendor. And that's what XEROF does. That's the problem we solve, is we try and remove some of that friction.
In my own words, I find a property anywhere in the world, in Germany. I say I made $1 million in crypto. I go to you. I say, I have this listing. I already talked to the broker, whatsoever. I did the pre-contract. Can you help me buying with crypto? You say, yeah, absolutely. We do the process. You run your backend processes. In the end, the escrow services or the seller gets fiat in the end. They don't even feel any crypto on their side. They don't even have to be involved. We don't have to talk to the seller. Is that the way? Allow me my ignorant question. I just want to make sure that I get like the flow from a non-crypto expert's point of view.
Yeah, and it's not an ignorant question at all, Michael. You went right to the heart of the importance in the service that we offer, right there, which is that the vendor, the seller of the property, or the representatives of the sellers of the property, don't even know that there's crypto involved. If we're doing our service, if we're doing our job well as XEROF, then it should simply look like the buyer is presenting fiat and is therefore completing the transaction according to the terms that are laid out in the contract. Just to go back to a statement you made right at the start, sadly, it cannot be a property anywhere in the world, because there are certain countries that are subject to sanctions or subject to grey list restrictions. So we do, as a regulated provider, we're regulated in Switzerland, we do have certain restrictions in as much as, for example, we couldn't help an American buy a property in Russia, or we couldn't onboard to our platform a Russian citizen resident in Russia. So the usual terms that apply to what I would call the normal world of traditional fiat also apply to us because of our regulated status. But you hit really neatly there the value proposition, which is the vendor or the parties representing the vendor, if we're doing our job correctly, which we do, should not even know there is crypto involved.
How do you make sure that you are not exposed to too much risk, exchange risk whatsoever? Because I assume, here again, I'm not a financial expert, but I know a little bit about maybe like Forex trading whatsoever. There is obviously always a certain gray zone or at certain time where you are exposed to the highest risk, because you might set up a contract with the person converting the crypto to fiat and say, okay, we lock in this crypto to fiat exchange rate. But then once you do the transaction, the crypto, since it's still quite volatile, has changed in market? Or do you say, no, we will adjust or we will take the spot price or the price at that moment when we do the transaction? How do you ensure that you're not exposed to too much risk during the transaction from your XEROF point of view?
That's a great question, Michael. So it is true that the crypto markets are incredibly volatile. And the way we manage that from a XEROF perspective, and we're always thinking on behalf of our clients as well, because our risk really is our client's risk, and that's how we look at these things, is that at the time of the exchange, we execute immediately to a spot rate. So we have access to nearly 20 liquidity providers, which are different professional businesses, tier one businesses around the world, who we go to and sell our clients crypto to in return for fiat. And the way we work it is we run this process back to back. So we will have direct contact with the client at the time where we are about to run the exchange. We will go to our liquidity provider and ask them to give us a spot rate. We will communicate that spot rate to our clients, and this whole process usually only takes about 15 to 20 seconds. If the client accepts that spot rate, we accept back with our liquidity provider, and that locks that rate in. The liquidity provider then executes at that rate, and our client knows that the rate that they've accepted is the rate that they will receive. And that's the way in which we manage the process. So it does require our clients to be in direct contact with us at the time that they wish to secure the spot rate and be ready to give us an immediate answer within that 10, 15, 20-second window. But the clients that we're working with, because they're crypto native, they understand that process, they accept that process, they like that process because they're dealing with humans rather than just a computer interface where you have to do F5 screen refresh and hope that your commands went through and that you can see your funds turn up on your screen. They get an immediate response from us. So we've actually turned that area of risk into a little bit of a competitive advantage for us, because we're always delivering the human touch to our clients and always delivering that service through a human rather than through some sort of simple user interface where you're never really quite sure whether the internet is refreshed or whether, heaven forbid, in our space, you've been subject to some sort of scam. That F5 screen refresh to find out, is it real or have I been scammed, is a little bit of a heart flutter when you're talking about the numbers that we talk about for property transactions.
And allow me to go there a bit more into detail. I have my crypto on my ledger, on my hard wallet maybe, or I have my crypto on Coinbase, whatsoever. You said okay, it's not going to be just a couple of clicks. How does the transaction work? Do I send it to a certain address, my crypto, to you? Obviously here, my trust towards you plays a huge role if you do it like this. I need to be fully trusting you as a service provider. Or do you say, let's go jump into a Zoom call, we do screen share whatsoever without obviously showing the private key, and we do the process together? Do you have an API? Do I just go on Binance? What is technically literally the steps which I can imagine, which I have to go in order to conduct this process?
Yeah. Again, great questions, Michael, and it shows your understanding of the space really neatly, because these are the types of questions that our clients ask us all the time. Ultimately, yes, our clients have to trust us, because the process is as follows. Once we have onboarded a client to our platform, which does require us to undertake Know Your Customer, KYC steps, and also source of funds checks, checking to see where those funds have come from, how they were generated, and to make sure as best we can that we discharge our duties under our regulator of checking for anti-money laundering, fraud, or other criminal activities. So once we've completed that, we've usually built quite a good relationship with our client because we've spoken to them quite a bit. They've shared a lot of information with us. Maybe they've been to see us at our offices in Switzerland, or maybe not. Maybe everything is done remotely. And then what happens is, as soon as the client has an account on our platform, we give them a segregated crypto wallet. And what that means is it is a crypto wallet that sits on our platform, but is for their use only. So there are no other funds in it whatsoever. At the time of the transaction, we will ask our client to send the funds that they wish to exchange to that segregated crypto wallet. But there is a step before that, just to eliminate some of the potential technical risks and also to discharge another regulatory requirements that we have to undertake. We ask the client to make a very small but randomly numbered transaction. So it might be for, I don't know, 0.7232 US dollars of crypto to their segregated wallet. And we need to be able to identify that they have sent that amount, random amount of crypto in value to the segregated wallet. That allows us to do two things. The first is to test that channel works and to make sure that we can establish that connection. The second is it allows us to identify that individual has control of the wallet that previously we will have run the checks on to make sure that those crypto funds had not come from illicit sources. And that is part of our requirement to adhere to something called the travel rule under European law, which requires us to test every transaction before it happens and to be sure we can identify that the individual has control of the wallet, has control of the assets, and we can identify the person that is sending us those funds. Sometimes we will ask the client to run that over perhaps a Zoom call so that we can show the video of the client without exposing any of the private keys, as you said, actually receiving our instruction, undertaking the instruction and making the transmission. But the important point is those funds from the client arrive in a segregated wallet, crypto wallet on our platform. And then from there, we will move those crypto funds to our liquidity provider once we've received instruction from our client, as I described previously. Then what happens is once we receive the fiat back from the liquidity provider to the XEROF bank account, probably one of our banks in Switzerland, we will then send those funds on behalf of our client to the notary or to the vendor, the details of which are usually specified in the contract, and we can only send it to the details of the recipient as specified in the contract, referencing our client and referencing whatever the contract asks us to reference. So
Perfect.
to your point, it does require our client to trust us, and we build that trust through personal relationships, through processes that I've just described to you, but ultimately through the confidence the client can have because of our registered status in Switzerland and the fact that we have to adhere to a regulatory framework and that we are audited every year by the regulator to make sure that we are conducting our business to the requirements that we've laid out.
I appreciate the detailed description because in my head, I always had the ideas like once you can buy with crypto, I imagine my real estate platform to have a button and just like as easy as buying a book on Amazon with some clicks. And thank you so much for the clarification. It is important to potentially sign a DocuSign PDF document with you. You know, we go into contract and then we do it in order to also be fully compliant because you have the compliance regarding AML topics towards the authorities. Here, one question, how far can you technically go back? Because like where the money comes from, because there's like very different opinions on crypto is, you can trace everything with crypto, but then crypto is used for the black market in the dark web and stuff. So how far can you go? And then also, if you don't do your job correctly, because you are the one liable against the authorities, you are exposed yourself with an enormous risk.
Yeah, absolutely. Yes, we are. And it's a great recognition, Mike. And this is going back to, again, the value proposition of XEROF is we are, to a certain extent, giving confidence to both parties because of the service and because of the regulated status that we have, and therefore the processes we have to operate to. So we're bringing validity to the transaction to give confidence to both parties that the transaction is rock solid, at least from the perspective of the value that we bring as XEROF. We can't attest to the quality of the property and the fact it will be free from risk. We can't attest to the moral, perhaps the moral standards of our client that's buying the property. But from the piece we control, we give that credibility. How far back can you go with crypto? You can go as far back as reasonably you would like to go, right back to the genesis of those coins, i.e. when those coins or that unit of value was created or minted. And in fact, in one of my prior lives with the large Bitcoin mining company, we built an analytics firm because we saw the importance of being able to give that credibility, to be able to give that window. We called it crystal analytics, so be able to give that crystal view into the world of blockchain and understand where these transactions came from and who's been associated, or what has been associated with these coins through different transactions. So you can go as far back as you would like to go. The question from a regulatory perspective is, how far back is it reasonable for you to assume that you should go? And at what point are you undertaking a responsibility to examine the history of the coins rather than the activity of the individual that you are bringing onto the platform and bringing into the transaction? And that really doesn't have a very clear mathematical formula for us to adhere to. What we tend to do is we look at a percentage risk. So if the transaction is, I don't know, let's pick a random number, €1,000,000, and we can see that 2% of the coins in that €1,000,000 of value were associated with some sort of mixer service, maybe 3 years ago, and 4 or 5 transactions before our clients, then we make a policy decision about whether that 2 to 3% is an acceptable risk from within our compliance team for them to suggest that, yes, we can now proceed with this transaction. I use the analogy of cash. If you are in a bar receiving a €50 note from a client to pay for, I don't know, maybe 2 glasses of champagne, and you have a machine that could check for cocaine on that €50 note before you accept it, if there were traces of cocaine on that €50 note, you probably won't accept it. But you don't know any more than that with fiat, because now you're staring at someone and you have no way of checking empirically whether that individual has been consuming that illicit drug, dealing that illicit drug, or part of a criminal activity that has been producing that illicit drug, or is just an innocent individual who was given that €50 note by their bank through the ATM, who had not washed the money. You have no way of knowing. And that's an advantage that crypto has over fiat, is that you can look very deeply into the transaction history and then make an informed decision about the risk that you're facing through your counterparty. Whereas with fiat, in that example in the bar, you have no idea of the individual in front of you and what their link to that €50 note is with the cocaine on it, whether it's entirely innocent or whether it is in fact something that's malicious and therefore you really shouldn't get involved in.
You talked before about the authorities and also obviously about the legal aspect. You mentioned before MiCA, markets and crypto assets regulation. For someone like me who has never heard about that before, what is it? And I'm also, to be super frank, always getting those headlines, and I'm not sure if the authorities now are against crypto or for crypto, or if they try to create their own stable coin, and we are all becoming digital lemmings and enslaved by the dystopian state. First question here, MiCA, what is it?
So MiCA came from a relatively well-intended place, which was to try and provide a regulatory framework that would encourage the innovative side of blockchain. So blockchain is the technology on which crypto has been built. Where we arrived at, and this is just a personal opinion, having been involved very much in the negotiations around MiCA and the entire 3-year process from it being a paper to it being passed as a regulation, where we arrived at was a situation where it's kind of supportive for the blockchain technology, but has become more of a vehicle to allow the larger incumbent players to exploit the technology at the expense of the smaller, innovative startup company. There are a couple of exceptions where if you are creating a project which is less than €1 million in value, then there are some very light touch ways in which you can adhere to and demonstrate that you can comply with MiCA. You only have to produce a very light touch white paper, for example, if you are launching a project under €1 million. But if you're doing something around stable coins, which you start to touch on there with the concept of central bank digital currencies, then MiCA has really done a very good job of ensuring that only stable coins that Europe wants to allow in will be allowed to operate. And therefore, one of the impacts has been Tether, USDT, one of the very largest stable coins, and some would argue the stable coin or unit of value that underpinned most of the transactions in the crypto market for a large number of years, has now become impossible for a European player to interact with since MiCA. So MiCA has done a very good job from that perspective of entirely shutting out anything the European Parliament and the European Commission do not want to see in Europe from a stablecoin perspective. And some might suggest, if they were slightly more cynical, that kind of paves the way nicely for some sort of euro-based central bank digital currency, which personally I'm entirely against, because in my personal view, it has the opportunity to breach privacy and security in a way in which nothing has ever been able to breach our personal privacy and security. But MiCA was a long time in being created and giving birth to, and the real nucleus for MiCA was when Facebook wanted to launch its stablecoin called Libra. And the working title of the paper in the early days was the Libra Killer. So that tells you everything you need to know about, I guess, where the idea for MiCA came from. But it's true, it's a very strong regulatory framework, which in the absence of anything else should be welcomed, but it doesn't do what it intended to do to support innovation. Rather the opposite. It tends to stifle the smaller player and favors a larger player.
You're incorporated in Switzerland. We talk EU regulation, and then we go higher on the level on my question regarding where do you think is geographically, politically the best playing field for a crypto provider? Where are the politics the most advanced? Not the most regulated necessarily, but embracing it and having a discussion, because I also see that you're doing a lot of, let's say, implicit lobby work or publications and stuff. You are a voice in the crypto space for exactly that reason, to have the discussion. You being between the UK, Switzerland, European Union, potentially you also know what's going on in East Asia and in the USA. Where do you think is right now like the country or the political situation where you can have the best conversations with?
We chose Switzerland 4 years ago when we set up XEROF because it had the best regulatory framework, or AML framework. Since 2018, actually, Switzerland has had an AML framework that meant there was a pilot's checklist. You could start at A, go to Z, and know if you worked through the checklist and ticked all the boxes, you were compliant. And that still is the case, in my opinion. The additional reason I would say Switzerland was our choice and probably would still be our choice at the moment, to answer your question, is because of the ecosystem built around or built because of that framework since 2018. And the fact that the Ethereum Foundation were welcomed into Switzerland and created, I guess, a lot of the momentum that helped educate the lawyers, the regulators, the bankers, and that whole ecosystem of professional services and required participants to deliver what is a really well-informed, really well-educated entire ecosystem where you can have those conversations. And it still is the place that I would answer your question with as the best place, though there are some early signs that the US is waking up. The Genius Act that I think it was just earlier this week was signed in, goes some way towards indicating that the US is waking up, though again, that is a really strong focus on stable coins, a little like the EU. I think the EU has missed a heartbeat by not supporting entrepreneurs enough with MiCA, and they will not be focusing on a MiCA 2, is my understanding. So that is not going to be anything that will be changed anytime soon. The Middle East, in particular the UAE, has always been buoyant for crypto. I see Abu Dhabi Global Markets, who were a member, I was very proud to have them as a member of my government advisory body at the Trade Association. They have been making great strides forwards in building an ecosystem within ADGM, Abu Dhabi Global Markets in Abu Dhabi, that it has very high bars for levels of participation to vet the professionalism and the quality of those businesses. But it has to be said, it's still a relatively small marketplace. So whilst the quality is high, the addressable markets might be quite smaller than, for example, the US. I think China is a market which very few of us talk about anymore, perhaps because it's become so much focused on itself rather than the external world. But China has made great steps towards embracing and exploiting blockchain technologies, Web3 technologies, and certainly AI. But does that mean that it's open for business to someone like Michael, you or me? I think you or me would struggle very greatly to go and set up a crypto business in China at the moment. So that for me tells me that it's not the greatest of places. And then certain parts of Africa, Central America are quite interesting too. Again, lots of experiments taking place, but nothing that says there is an ecosystem, a regulatory environment, or a global engagement beyond which Switzerland provides that would tell me that there is anywhere better than Switzerland at this point in time.
Marc, thank you so much for your time. I know your time is very limited. Is there anything else you would like to share with the audience which we haven't touched upon?
Just to say, Michael, that well, firstly, it's been a pleasure. Thank you very much. I wasn't expecting the informed questions that you would put to me. So my apologies to the audience if we went really deep into crypto and regulation, but I wasn't expecting you to be as informed as that. I'm delighted that you were. I'd just like to bring it back to real estate and just remark that we are seeing huge increased demand at this point in time, both from real estate agents and participants in that industry, wanting to understand how they can engage with this new wealthy audience, and from the crypto holders themselves. And therefore, there's never been a better time to contact us at XEROF if your real estate company wants to access this market, or if you're being approached by individuals who are wealthy in crypto and don't have access to banking, but would like to buy a substantial piece of property from you. It's not an area that you need to learn about, and therefore you don't need to be worried that you maybe need to take on new staff, build new aspects of compliance. That's really where we as XEROF can step in. So think of us a bit like a trusted partner. We're not going to convince you to learn about a new industry, to hire a crypto bro in each of your agencies, or to build a new function within your compliance team. That's what we can do on your behalf. We just allow you to access this marketplace if indeed you want to.
Perfect. Marc, thank you very much. Sending the best regards and a big hug. It's a pleasure getting to know you. And yeah, we talk soon.
Thank you, Michael. Really appreciate the opportunity. Look after yourself.
And of course, I will also put the information in the show notes regarding how to reach out to you before I forget.
Thank you very much.
This video is brought to you by HalloCasa. Our tool transforms independent local real estate agents to global real estate agents. Create your own profile for free and get contacted by international investors. Sign up with the link in the description.